Well, good morning, everyone, and welcome to our 11th Annual Financial Executive Forum. This is the third event in our 2025 series, and we really appreciate you joining us this morning. My name is Grant Palmer, and I'm a partner with Cordia Resources by Cherry Beckert, one of the sponsors for this series. As you will see, we also have four other great sponsors who I'll introduce shortly. I'd also like to thank and acknowledge Cherry Beckert for their interesting and informative presentation on CMMC Demystified and the GovCon CFO's Compliance Challenge as presented to the FEF group last Thursday by Tracy Sheps, Brigitte Scott, and Steve Ursillo. So our sponsors have been very excited to see such a great response with over 1,400 people registered for the series. We know and understand how valuable these high quality and relevant training events are to financial professionals managing corporate accounting and financial functions. Once again, we're providing the series in a fully virtual format and are running it in 2-hour sessions every Thursday morning over a 6-week period of time. We found that this format works best for our collective clients and friends. Today is our Virginia Ethics session, which is required 2-hour annual CPE course for CPAs licensed in the state of Virginia. This session is being presented by Jennifer Lewis from the AICPA's Business Learning Institute. You should also know that we have a great team from Cherry Beckert running our virtual program today, but please bear with us should there be any technical difficulties. As you can see, we have 6 great programs for you in this year's series. If you fully attend all 6 events and you're a CPA, you can earn a total of 12 full CPE hours. Our series includes the following. We spoke about it a minute ago. Last week, the Cherry Beckert team presented CMMC Demystified and the GovCon CFO's Compliance Challenge. Today, we have Jennifer Lewis, who will once again join us as our ethics instructor from the AICPA's Business Learning Institute, and will teach our Virginia Ethics program. The 2-hour course is required by the Virginia Board of Accountancy. Next Thursday, October 23rd, Marsh McLennan, a returning sponsor to the FEF, will present Fiduciary Risk, Responsibility, and Opportunity, Implications for Health and Retirement. On October 30th, the Wells Fargo banking team, a longtime friend and sponsor of the FEF, will present their economic update and Let's Get Digital, banking automation with APIs and embedded finance. Finally, on November 6th, the Cordia Resources by Cherry Beckert team will feature our CFO Roundtable, which will once again include an impressive group of CFOs. Next slide, please. Before we move forward, we saw the video, but I'd like to cover some of our basic CPR webinar rules. In terms of NASBA compliance, our polling questions will appear throughout the webinar. You will need to answer 75% of the 8 polling questions to receive full CPE credit for each session. Any answer to a polling question, correct or incorrect, counts towards the 75%. Since you'll be muted during the entire session, please use the Q&A feature to submit your questions to the panelists. Please use the chat feature to communicate any technical issues that you may have. After the program, please complete the session survey using the link that we will send to you in the post-event email. And your certificates, your CPE certificates, should be issued within 10 days of this course. If you have any questions, please reach out to Cherry Beckert Learning at cbhlearning@cbh.com. Next slide, thank you. Now I'd like to acknowledge our great team of sponsors for this entire 2025 Financial Executive Forum series. Our first sponsor is Marsh McLennan Agency, a leading provider of business insurance, employee health and benefits, retirement, and private client insurance to organizations and individuals. Marsh is a returning sponsor this year and is represented by Allie Gregory, an employee health and benefits consultant. Next is Wells Fargo Bank. Wells Fargo Bank, a well-known national bank, is represented by Executive Director Ben Kane. Wells Fargo Commercial Banking is a returning and longtime sponsor of the Financial Executive Forum. Our next sponsor is Cordia Resources by Cherry Beckert, a leader in recruiting and staffing services in accounting and finance, technology, HR, contracts, and administrative support services, and is represented by Doug Smith, one of our key managing directors who leads our sales and staffing services team at Cordia Resources. Fourth is Sage, a leader in finance AI and automation with a financial management solution that has helped over 30,000 businesses achieve higher performance by providing the automation, connected insights, and trust and control needed to increase impact and drive real results. Sage is also a returning sponsor this year and is represented by Gary Mayer, Senior Channel Executive at Sage. Our fifth and final sponsor is Cherry Beckert, a top 25 nationally ranked accounting firm specializing in tax, audit, outsourced accounting, advisory, and system services, who is represented by Tracy Sheps, a CPA and a partner at Cherry Beckert. As you can see, we have a full agenda today. All right, next slide. Now I'd like to introduce Jennifer Lewis, who will be leading our Virginia Ethics Training Program today. Jennifer, a licensed CPA, founded Emergent Solutions Group, LLC in 2003, where she focuses her energy on designing and delivering high-quality, practical, and engaging accounting and auditing training. She was most recently Director of Audit Product Development at Surgent Professional Education. Prior to that, Jennifer served as Director of Training Services at Audit Watch, Inc. She was the Financial Operational Audit Manager at AARP and was an Audit Manager for Deloitte & Touche. Jennifer graduated summa cum laude from Marymount University with a BBA in accounting. Besides loving life on the lake with her husband in Charlotte, North Carolina, she enjoys hiking with her Coton de Pouliard dog and savoring any precious moments spent with her 2 adult sons. Let's please give Jennifer a warm welcome. Jennifer, welcome, and turn it over to you.
Thank you very much, everybody. I'm going to have to share my screen here. So if you give me just a moment to be able to do that. Everybody should be seeing my screen and hearing me now. So we'll continue with our program. I'm excited to be back this year. I've been here multiple years doing these ethics courses. It is the Virginia approved version of this course, which means that we are going to be sharing a brief 2025 VBOA video where they're going to remind you about certain things that they think are important for you as you're licensed here in Virginia. And then after that video is completed, we'll continue with my part of the program, which will be talking about general business ethics is the focus of this particular program, where we'll talk about some of the foundational concepts of ethical behavior. We'll talk about some of the moral development or moral issues that you face, both as we think about from a professional point of view, but also as we just leave our day-to-day lives, because certainly as we make ethical decisions personally, that does create patterns of behaviors and has impact and influence on what is it that you might do if you're making a professional decision. And there are going to be some core concepts that we'll discuss that you may have heard from in the past of things that have been discussed, but certainly I try to each year try to add different examples and illustrations around those things, as it is a good reminder of how important it is that ethics are to us preserving and protecting the value that we have as our profession as a whole. So what I'm going to do is play the VBOA approved video, and I'm going to turn my camera off during that time frame. But I will come back and see you when we get back after the video is completed.
Welcome to the Virginia Board of Accountancy's 2025 Ethics segment, a compilation of tips from the VBOA to help you as CPAs and CPA firms keep your license in good standing. As a licensed Virginia CPA, you are responsible for knowing and following the Virginia laws and regulations governing how CPAs can and should perform professional services and represent themselves. Each year, we choose a few regulations to highlight in this segment. This year, we will review 1. The board's mission and authority. 2. Use of the CPA title, regulation changes. 3. CPE requirements. 4. Virginia's inactive status. Let's start with some background. Established in 1910, the Virginia Board of Accountancy regulates certified public accountants, CPAs, in Virginia through a program of examination, licensure for individuals and firms, consumer protection with enforcement, continuing professional education audits, and peer review oversight. The board receives its authority to regulate CPAs in Virginia from laws and regulations. The Code of Virginia is the official record of laws enacted by the Virginia General Assembly and signed by the governor. The code prescribes or prohibits conduct and is applied by courts, government agencies, and private parties. The laws which regulate the CPA profession can be found in Title 54.1, Professions and Occupations, Subtitle 6, Professions Regulated by Other Entities, Chapter 44, Public Accountants. This chapter authorizes the board to establish scopes of practice, set requirements for licensure, and grant authority to take appropriate disciplinary action. In addition to establishing the qualifications for applicants of the CPA exam and licensure, the board requests regulation changes of the governor in accordance with the authority conferred upon it by the Virginia Administrative Process Act. These regulations are necessary to assure continued competency and to effectively administer its regulatory mission. The board has the authority to bring enforcement actions against licensees for violations of the Code of Virginia and the board's regulations, including unlicensed use of the CPA title or practice of public accounting, lack of compliance with continuing education requirements, substandard practice, violation of the standards of conduct and practice, and disciplinary sanctions brought by other federal or state agencies. Penalties and sanctions include monetary fines up to $100,000 per violation, restrictions placed on the CPA or CPA firm's practice, and the suspension or revocation of your individual and/or firm CPA license. We recommend that every licensed CPA review and understand the laws and regulations that must be followed to remain in good standing. If you fail to follow the applicable laws and regulations, you will be subject to discipline and may have your license suspended or revoked. In this regard, a CPA license issued by the VBOA is different from other related professional credentials, which are typically issued by membership organizations. Membership organizations are generally limited in their authority and ability to affect the related credential. However, you should be aware that the Code of Virginia section, Standards of Conduct and Practice, incorporates guidance from standard-setting authorities. As an example, it is important to note that even if you are not a member of the AICPA, if you hold a Virginia CPA license, you are required to conform to the AICPA Standards of Conduct and Practice and the AICPA Code of Professional Conduct, as both are incorporated in the Standards of Conduct and Practice. These documents are available for free download at us.aicpa.org. An important topic we want to review this year is use of the CPA title. The use of the CPA title by both individuals and firms was affected by code changes that went into effect on July 1st, 2024. Remember that only licensed individuals and firms may use the CPA title in Virginia. As defined in the Code of Virginia, using the CPA title in Virginia means the use of the terms CPA, Certified Public Accountant, or Public Accountant in any manner of communication by any person, firm, or entity to persons or entities located in Virginia, portraying such person, firm, or entity as being licensed or legally permitted to provide professional services in Virginia. Holding a Virginia license or the license of another state constitutes using the CPA title in Virginia. Use of the CPA title includes logos, business cards, email addresses and signatures, including domain names, internet postings, including social media, letterhead, reports, signs, tax returns, or any other document or device. Determining if the use of the CPA title rises to the level of a violation is very fact-specific and takes into consideration all information surrounding the use of title. Therefore, generally speaking, if you plan to use the CPA title, the best way to avoid a potential enforcement matter is to make sure you have an active individual or firm CPA license. As an important reminder, if a firm or employer is advertising or identifying an employee using the CPA title, and that individual is not permitted to use the CPA title in Virginia, both the individual and the firm can be held responsible and subject to discipline. As an individual, you may use the CPA title only if you hold an active Virginia CPA license, have been granted inactive status in writing by the board, or are a CPA licensed in another jurisdiction and comply with the substantial equivalency provisions of Section 54.1-4411. Several VBOA enforcement cases last year were related to the unlicensed use of the CPA title. Individual CPAs who no longer hold an active license are being disciplined because they, in some form or manner, used the CPA title or referred to themselves as a CPA.
Polling question.
Individuals and firms find themselves in violation of the use of the CPA title rules by simply failing to renew their Virginia CPA license by June 30th of each year. Penalties for unlicensed use of the CPA title range from reprimands to monetary fines. The Code of Virginia section, Licensing Requirements for Firms, was updated to require a CPA firm to also hold an active CPA firm license to use the CPA title in Virginia. This update now makes use of the CPA title individuals and firms consistent in that they each must have an active CPA license to use the CPA title in Virginia. However, even if a firm is not using the CPA title, it is still required to obtain a firm license if it provides a test, compilation, or financial statement preparation services. The other firm licensing requirements have not changed. At least 51% of the owners of a firm must be licensees or trustees of an eligible employee stock ownership plan. A firm whose principal place of business is in Virginia and provides a test services, compilation services, or financial statement preparation services to persons or entities located in Virginia must hold a Virginia firm's CPA license. A firm whose principal place of business is not in Virginia, but is performing a test services, compilation services, or financial statement preparation services to persons or entities in Virginia must hold an active Virginia CPA firm license or a firm license of another state that is in good standing and allows the firm to provide these services to persons or entities in the state where its principal place of business is located. And remember, any firm providing services in Virginia within the scope of the AICPA's peer review program standards must also be enrolled in a practice monitoring program and must comply with all conditions. You can apply for a firm license on our website. If you are incorporated, are a partnership, or use a fictitious name, you will need to submit your organizational documents and/or filings with the Virginia State Corporation Commission when you apply. The specific documents needed will depend on your business structure. As always, if any questions arise, please contact the VBOA. We realize that this topic is covered almost every year, but our CPE deficiency rate has not improved. So once again, we want to walk through the CPE requirements for a Virginia licensed CPA. Continuing professional education, or CPE, is an integral part of the lifelong learning required to provide competent services to the public or an employer. Fulfilling the CPE requirements helps set CPAs apart as financial professionals. Everyone with an active CPA license must complete the required CPE unless they have a written exception from the board. If you have an active Virginia CPA license, you must complete 120 CPE hours over a rolling 3-year period, with a minimum of 20 hours each calendar year. Licensees must also complete a 2-hour VBOA-approved ethics course, such as this one, every year. And remember, if you release or authorize the release of reports on a test services, compilation services, or financial statement preparation services for persons or entities in Virginia, you will need to complete a minimum of 8 CPE hours each year related to such services. These 8 hours count toward the yearly minimum of 20 CPE hours and 3-year rolling period minimum of 120 CPE hours. To find CPE requirements for new licensees or information about CPE reciprocity, please visit the board's website. Maintaining CPE documentation is your responsibility. Don't keep your records exclusively on your work computer or only in your organization's learning management system. You should maintain a copy of your own records. At the time of an audit, if you do not have the evidence to support CPE, you will not get credit. Every licensed CPA in Virginia is held to the same documentation standards. We cannot accept receipts, registration confirmations, canceled checks, outlines, spreadsheets, PowerPoint presentations, or sign-in sheets, etc., as valid CPE documentation. Any support for CPE needs to identify the event, the date and length of the program, and some indication that you were in attendance. Typically, this is a CPE certificate, but some programs may not offer CPE certificates. If you are attending a conference or learning event that does not offer CPE certificates, you need to work with the provider to obtain adequate documentation, ideally before the event. Do not wait until you are selected for CPE audit. CPE audits cover the prior 3 calendar years, and tracking down training records can be time-consuming and futile. We highly recommend that you maintain your CPE records in the software program used by the board, NASBA CPE Audit Service. After each training, record the event and upload your certificate. The system, which is free to all Virginia licensees, tracks compliance and keeps all your records in one place. Remember, when you renew your license, you are certifying that you have met the CPE requirements for the previous 3 calendar years. If you realize that you did not meet the requirements, you may self-report a deficiency. Individuals who self-report a CPE deficiency are subject to lower penalties than those individuals who fail a CPE compliance audit and do not self-report. Check our website for more information about what counts as CPE and what documentation is needed. But remember, when in doubt, call or email the VBOA CPE team. One small and select group of people is exempt from CPE requirements, licensees approved for inactive status. The Virginia Board offers an inactive status for retired career CPAs, CPAs who are not working for an extended period, such as stay-at-home parents, or CPAs who have completely changed careers, such as to an elementary school educator, registered nurse, or veterinary technician. The inactive status allows people in such circumstances to keep the CPA title in name only, without being held to the VBOA's CPE requirements. The inactive status is not automatic. You must submit an application, and then if granted, receive approval in writing from the board. Inactive licensees will reflect as inactive in our CPA license lookup. Any CPA providing services to the public or working or volunteering in any business environment, including public accounting in any role, real estate, business, information security controls, or project management, will not be eligible for the inactive status. We all understand there is significant value to being a CPA. It is something to be proud of, but it also requires a continued effort for all CPAs to maintain that value. During the inactive application process, you must certify that you are not providing any ineligible services, and you will inform the board of any employment or position changes. In addition, you may not move into a position that includes any financial services without first notifying the board and renewing your active license status, which would include completing 120 hours of CPE and the current year's VBOA-approved ethics course. The inactive status requires an annual renewal and payment of a $60 fee. Each year during the renewal process, the licensee must certify that they continue to meet the inactive requirements and there has been no change in position or responsibilities. Disciplinary action can be taken for those that falsely certify on any application to the board. In closing, we hope you have learned useful information from this 2025 VBOA ethics segment. The VBOA website, boupvirginia.gov, is a great resource for further information. If you have questions about any topics covered, please contact us at boa@virginia.gov or 804-367-8505. This concludes VBOA's 2025 segment. Thank you for watching, and please enjoy the rest of your chosen ethics course.
All right, everybody, welcome back to the program. Hopefully you got a few useful tidbits of information about how it is that you can ensure that you're maintaining compliance with what we have in the Commonwealth of Virginia associated with the licensing requirements and our designations as a CPA. We're going to move forward to talking about the next part of the program, which is to focus on just general business ethics. And we're going to begin by talking about the concept of ethics and to give some illustrations about how it applies in today's environment. We are going to begin by talking about the concept of ethics being embedded in just ancient moral philosophy. Socrates, Aristotle, they all explored to say, what does it mean to be moral? What does it mean to be someone who is morally good or bad? And the concept being that happiness does come from the fact that I do have an understanding of right from wrong. I have that knowledge. But then I also have happiness because of the fact that I feel as if I am making good choices, the wisdom of intellect to apply those concepts as we think about the fact that I have goodness in my character. I have sense of right and wrong. I have an ability to discern the two, and I'm actively applying to try and make sure that I am reinforcing the things that are good. And Aristotle created the virtue ethics where they looked at that further combination of the fact that thought, choices I'm making, are also tied into whether or not I have a moral character. And Aristotle, in his wisdom, also said that we have to understand that there is a balance, right? You cannot say that in 100% of the time it's immoral to lie. Well, sometimes when you look at the balance between the implications of not lying and the implications of lying, that in some scenario, what we call white lies, we know that it's not right to lie. But yet, as we try to cultivate a balance, we try to reach what's called the golden mean. And certainly, when we think about applying that, it is that we make choices. We understand the implications. We look at what would be the most proper, just, fair thing to do in this particular scenario, and we apply things accordingly. We all are aware of the fact that, there's lots of gray areas in life as we talk about things like what's a material misstatement in the financial statements. Well, certainly materiality is a subjective determination to determine whether or not we're doing something that's fair and just in the preparation, fair presentation of financial statements, for example. The goal is to figure out how can we have something where it is sustainable, right? That we can aim to do what is good and just, but doing something where we feel as if we can make choices in order to ensure that we are striking that proper balance. If you look at the 14 virtues that Aristotle had, he looked at things like the fact that you should live well to be happy, but also you should be temperate, which is the opposite of that. You should be modest. Here's a polling question, by the way. You should be modest, but also you should take pride in your accomplishments. You need to be truthful, but you also have to concern for others, hence that white lie concept that sometimes come into play. So the goal being is that we consciously are making examples of taking examples of things and trying to figure out things that might be difficult, but trying to find where I believe we're in a situation where I am trying to achieve as much balance between these two opposite things as I can. So, for example, making tough decisions, like if we need to lay off people or we need to restructure an organization in a financial crisis. We need to carefully understand the consequences. While we want to have the courage to do the right thing as it relates to ensuring that the company can survive, we also want to understand the consequences as we make the decisions about who to lay off and what to do in our restructuring decisions. We need to manage our time between work and personal life. We want to make sure that we are satisfying our roles and responsibilities that we have at work, but we also want to avoid burnout and unhealthy routines. What is self-sustaining, right? What is something that can be that a reasonable thing that we can continue in the future, know that we're operating underneath the concept of goodness, but also allowing ourselves to be happy. We need to think about giving constructive feedback in an honest way, but be empathetic in how it is that you go about doing it as you show concerns for others. These are all illustrations of how it is that we might need to look at those 14 virtues that Aristotle laid out and to say, how do they apply in this particular scenario? Finding that ethical balance. We are going to primarily be thinking about business ethics today as we think about the actions and decisions that we make that affects these organizations that we work with or affiliated or associated with. What is right and wrong as it pertains to business practices? And what we find sometimes is that it does become extra challenging when we're in dealing with business practices because individually, as I make my own decisions, it's affecting me. And certainly I need to think about how my decisions affect others. But in a business, we know that there's going to be others that we're affecting. We need to think about how it is that we're affecting our ownership, our investors. If I'm a nonprofit, how's it affecting my members? If I'm a government, how is it affecting my citizenry? As we are looking at what it is, what's the reason why we exist? Are we there to satisfy a mission? Are we there to provide a rate of return? We want to satisfy those stakeholders as we're trying to figure out how to be ethical towards them, as we're maximizing the value that we're providing. But at the same time, we have a lot of other individuals that are impacted by any of my decisions. As I think about my vendors, my customers, my employees, my contractors, we need to think about what's fair to them. How do we make sure that I'm treating them fairly, that I'm concerned about their well-being? And then a broader point of view, which has actually gathered emphasis in the past decade, is around environmental social governance. How is it that we're making decisions that affect climate and climate change? What are we doing as we're supporting things like goals with diversity, equity, and inclusion? Thinking about from a governance point of view, like what really should be the culture and tone of this organization as we're having a foundational basis for making other types of decisions. What does this organization represent? Those types of concepts have really taken hold as being, had always been one of the elements to consider, but has really expanded to be even more important in today's society. We have a lot of parties that are interested in understanding how do these matters affect an organization's decision? How is it going to affect your business strategy, your cash flows, your financial position? Certainly, it's how is it going to affect your operations and your operating environment and your ability to perform as an organization, whether you're a public or private organization, whether you're for profit or not for profit, just in general growing interest. But also, there is a segment that is interested in this information from more of a public policy perspective or influencing corporate behavior as they're looking to get metrics such as your greenhouse gas emission rates and other factors, more from pushing a public policy or having the hope of influencing judgments and decisions about what the organization chooses to do. So there are some ethical dilemmas related to even these ESG related matters, such as greenwashing, where you are basically marketing some sort of sustainability claim, like we're going to be net carbon neutral by 2030, or marketing that my product is environmentally friendly. To make false or exaggerated claims is one of the growing concerns. To make some sort of commitment around sustainability goals and then not really failing to follow through with that in the end, which is why you see a broad emphasis around things like having sustainability standards and having for public companies this emphasis of what should be disclosures that you're making specific related to matters with climate change. You see that on an international scale. You saw initiatives here in the US where there's this broader interest at both the SEC level, trying to figure out what does that mean, what should we regulate, but also at various state levels, like in California, for example, they have their own requirements. If you're operating and doing business in California, that there's certain things that you have to provide related to these matters. But in addition, thinking about the concepts of what should we do if we're reporting metrics and having some form of attest or assurance to make sure that these metrics, that these statements, that they're fair and reasonable in accordance with some suitable objective criteria. So there's a role for CPAs as you're looking to make sure that these metrics, this information is being provided, these assertions that are being made, that they are fair and faithful in the circumstances. We can look at other areas where they would say, well, there's a lack of ethics if you promote diversity initiatives without actually making meaningful action or organizational change. Like, is there tokenism that is occurring? There's a concern about the fact that you might be partnering with a vendor or supplier that is using child labor or unfair wage practices as you focus on your supply chain, as we might be buying from somebody that's the lowest cost provider, but are they really an ethical organization from us to be purchasing from? Also thinking about social responsibility and allowing advertisements that might provide misinformation or harmful content. You see that coming up often as you just listen to the news, right? As you just read newspapers, as you look at things on the internet, that all of this is things that do pop up as we are focused on the ESG, on the things that have to have as a perspective as an organization. So, for example, Starbucks was caught up in a scandal where a customer advocacy group alleged that they weren't really using 100% ethically sourced coffee, that they were using coffee from farms that had labor and human rights violations. They're like, you can't say that you're 100% ethical if that's not a true statement. And there was a lawsuit that emerged from them making that statement. We need to think about how technology is creating ethical dilemmas for a variety of individuals, such as the fact that are we collecting and analyzing customer data without getting their consent, without being transparent about it, particularly as we think about the use of the fact that we might be gathering personal private information. But even monitoring employees, using surveillance tools to monitor our employees' productivity without having clear policies, without having a respect for privacy. So certainly we would say that we do want to make sure that we are able to monitor our employees in an appropriate way. Like, what could we do to meet our goal of productivity while counterbalancing the fact that I have to have a concern for others? I have to think about their rights to privacy, right? I have to make sure that I am being transparent. Even as we think about gathering biometric data, as we're signing on to things these days with our fingers or looking at our face recognition, are we misusing or inadequately protecting our biometric data that we might be capturing for employees or customers or whoever might be using our systems? As technology evolves and advances, we need to think about the impact on, are we ethically doing things in a way that would be consistent with the sense of goodness? When we look at governing the organization, it might be that an unethical thing would be to use a misinformation campaign against a competitor to make misleading claims about another product or competitor, or to make misleading claims about the market conditions that we're in. You could say that taking aggressive or illegal action against a union would be unethical, suppressing efforts to unionize, but also thinking about how it is that you're involved with political contributions and lobbying and other factors, and how there could be political figures or movements where it could lead to backlash from our customers or from our stakeholders. So each of these things, a organization and its governance structure, its management, its board, and other appropriate parties. Polling question. You want to make sure that you are acting in a way that you are taking those factors into consideration and trying to resolve them in a way that you would think would be balanced. Executive compensation. Like, we want to make sure that everybody's fairly paid. We want our executives to be having incentives to grow and to meet strategic and operational and financial objectives, but we don't want to disproportionately increase executive pay while we might be laying off or underpaying our lower tier employees. We want to make sure that we're not ignoring things like inadequately addressing allegations about discrimination or harassment in the workplace. We never want to sacrifice safety in order to improve profits. Just like as we think about for CPA firms, as another example, that the new AICPA's quality management standards or the PCOB's quality control standards, one of the big emphasis that they have with leadership and governance of a CPA firm is to never sacrifice the quality of our work in order to improve profits. That should be a foundational premise that we establish culturally within our organizations as we're still thinking about those types of matters. One of the examples we're going to talk about today would be thinking about Archer Daniels Midland. And then in 2022, the board agreed to tie executive bonuses to the success of a particular segment, an operating segment that related to nutrition. And that represented less than 10% of company-wide revenues. So the bonuses were primarily tied to this segment that represented a small portion of this large organization. And in 2023, 7 of the top executives received shares worth $72 million for exceeding metrics and targets for this really small segment. In 2024, the SEC challenged to say, what are you doing from an accounting point of view with this particular segment? And saying that they were manipulating the success of that segment. And ultimately, the FBI delivered grand jury subpoenas to current and former employees as they were investigating this. You could see that from a perspective of what it is that we might do, that here's a segment that is less material to the overall entity. They're hoping maybe that auditors and others won't pay attention to this segment because it's less material in the grand scheme. However, it's this segment that was where there was incentive or pressure for there to be cooking the books, for there to be manipulation of the information in this segment, because it's what was driving the ability to achieve all of these bonuses that existed. And so when we say what's fair, like what needs to be looked at, that would be a case where governance was allowing something that really shouldn't maybe have been the approach to take as you are thinking about the executive incentive compensation. So we can think about other things like a data breach of a company. Like, could that be deemed an ethical misstatement, right? Ethical misstep. And it can be because you weren't taking steps to protect that data. Like, you weren't managing your cybersecurity risks. And we all know that that's a risk. When we focus on risk management enterprise-wide, it is a variety of risks that we need to consider. And ethically, morally, in the sense of trying to do decisions that are consistent with goodness of character and making wise intellectual decisions, the intellect of thought that's supporting our goodness, it has to be risk management from a broad-based point of view. Now, sometimes our excuses around making poor decisions might be the fact that we're saying, well, I didn't personally benefit. But certainly from a CPA's point of view, and we'll talk about this a little bit more, we have obligations, even if I'm aware of somebody else doing something that we believe would not be considered ethical conduct, even if I'm not involved in it, if I'm not taking appropriate actions to try and be a whistleblower, to try to say, hey, I don't think this is right, to not speak up, right? To not take appropriate measures. You're not doing things consistent with your code of professional conduct as a CPA. Right? We cannot allow others to make poor choices when we are aware or suspect that this might be a poor choice. Now, certainly materiality. So just because something's not material, right? In the end, we have to think about quantitative materiality. We have to think about qualitative materiality. And I do acknowledge that as you strike that balance, like Aristotle discussed, there is some cases like a white lie that there is a materiality consideration, but it truly is something where I think it's the most fair and just decision as I'm counterbalancing the impact of my decision. Who's going to benefit? Who's going to be harmed? How would a prudent person look at this situation? Am I making a choice that is reasonable in the context of the facts and the circumstances? Prudent decision making is what we're really trying to go towards. And so we do need to think about the sense of integrity. If you have integrity, nothing else matters. It's like you know by instinct that you're going to make the proper choices, that you're going to make fair and balanced decisions. If you don't have integrity, then nothing else matters, right? Because you can't be counted on to make good, solid choices. And it's often that employees and others will look to management, look to governance and say, do I feel as if they're functioning with a sense of integrity as they're establishing the cultural tone of this organization? Is there a clear understanding of what we value, right? What would be considered sound business practice? What would be deemed acceptable behavior? As we think about what would we say if somebody had a sense of integrity, what would they be doing? Even as a CPA, and we think about accepting or continuing with clients, our code of professional conduct says only affiliate yourself, provide services, whether it's tax work or audits, that you're only affiliating yourselves with organizations, entities, individuals that you believe to have integrity, that we can have a sense that even if their actions could be hidden forever, that they still wouldn't do something that's dishonest. I have confidence in that because of the fact that we want to preserve our value as a profession to make sure that we're making conscious choices about who we lend our CPA designation to as we're providing attest and non-attest services, audit and non-audit services. Moral men, as Cicero would say, would do nothing dishonest, even if his actions would be hidden forever from the knowledge of God and men. I reflect back to the E&Y CPE scandal, and I do see a question here that I'll get to in just a moment, that they paid $100 million fine after the auditors cheated on an ethics component of CPA exams and CPA courses. So what was happening is that they were having where you could get the answers to the learning questions in the final exams. Like it was available on like this shared file drive. And what individuals were doing is they were going straight to those resources rather than truly going through and taking the course as intended. This occurred over multiple years. And when the SEC, there was a whistleblower that said, hey, I think this is going on. EY admitted to withholding information from the SEC's enforcement division. And they imposed this $100 million fine, which was the largest penalty that was ever imposed against an audit firm. Texas got involved and filed another $3 million fine. And so you had this all happen in 2022, where there was this big scandal that was widely publicized, and everybody knew about this scandal and knew how it was critical not to cheat on your CPE. And then they had another scandal in 2024. In October of 2024, EY dismissed a lot of employees because they were having a learning week. They said, okay, one of the struggles that people said why there was incentive or pressure to cheat is I didn't have the time to do my CPE. So we give you a learning week in the month of May, and hey, focus on getting your CPE. But people would have multiple courses open at once. So I was taking 2, 3 different courses at the same time. And they could tell from the data that this was happening. And they dismissed the employees that were doing that. The terminated employees said, well, I was multitasking. I have multiple monitors. But the premise being is you're not focused on the curriculum and the training one at a time. How could you possibly be really learning if you're trying to multitask with, could you imagine watching my video with somebody else's video simultaneously going on? And that's not consistent with the culture, right? It's not consistent with behaviors that are acceptable for us. And having to come and take these really hard measures to reinforce the fact that, hey, we just had this big scandal, right? We tried to learn from that and we're trying to do the right thing. And then there is going to ultimately sometimes be where we have to fine tune to say, no, we're not slipping backwards in our behaviors. We're only moving forward as we set the culture and the tone for this organization about what's permissible and what's not. And as a result of the E&Y scandal, as well as other firms got caught up in this scandal, by the way, the AICPA did relook at the Code of Professional Conduct and said, as we think about not just focusing on is it ethical to solicit or share questions and answers to the CPA exam, we also need to think about any activity that is related to acquiring or maintaining your competency and qualifications of being a CPA, which does include your continuing education, your CPE. We want to make sure that we're not doing anything unethical as a result to that activity. And if you're found to be doing something unethical, your license as a CPA is subject to revocation. There could be some form of disciplinary action. So I do want to acknowledge this question we got about the Midland example. It says, so is the core issue in the Midland example the accounting fraud or the lack of appropriate governance of a board that has a duty to shareholders? So as we think about these matters. And so it is both, right? Polling question. It really is both, like similar to other situations, other fraud scandals that had occurred as we think about, remember Tyco, for example, where they were saying that the chief executives were unfairly taking compensation, that they were running through kind of personal charges to the corporation, but yet governance was approving these things. So yes, it's a little bit of both, right? As we think about an intention to deceive or doing something that we're saying is not consistent with finding balance to the duty we have to a variety of stakeholders. And from a governance point of view, that they had flaws. Just because the board approves something doesn't mean it's right. And that is part of the lesson learned from the Midland type scenario. There also is another scandal that in recent years as we think about McKinsey and Company. So McKinsey and Company in 2023, you had more than 400 civil society groups that signed a letter accusing the consulting firm of influencing a agenda by pushing these controversial carbon market schemes that would benefit its fossil fuel clients. So you're as a consulting group, my client is these fossil fuel companies, but yet they're saying that you were inappropriately influencing topics and agendas. And in 2024, the Africa division of McKinsey and Company ended up paying $122 million to settle charges that they were, in essence, bribing government officials in violation of a Foreign Corrupt Practices Act as they were pushing their client's agenda. So that's sometimes a struggle, right? My job is to help as a consultant entities achieve certain goals. My job as a salesperson is to make the sale, right? My job might be involved with saying, well, but even as I satisfy my role and responsibility, I have to make sure that I'm doing it in a fair and just way. So as we go back to old scandals like Enron, Jeff Skilling, the founder of Enron, was a McKinsey consultant for 21 years. Jeff Skilling was ended up sentenced to 24 years in prison for making false statements, insider trading, securities fraud. So we have to reflect upon, well, McKinsey and Company recently had this big scandal related to not doing things in an ethical way. There was corruption in what they were doing. It was inappropriate influence. And then we can go backwards in time and say, well, Jeff Skilling was a McKinsey consultant, and Enron used McKinsey on 20 different projects, which said, are we in a sense where this consulting firm was ignoring red flags or ignoring things because culturally, perhaps as this consulting firm, it was like, do whatever it takes to satisfy your client. Is there a flaw in who it is that we might hire? Right? As far as the cultural tone of where they came from and the cultural tone of who we use as vendors, right? That also is a concern. So when we look at other current examples, Meta, there was an asset misappropriation scandal where it related to the fact that they had workers in Los Angeles that were using these 25 meal credit vouchers, $25. What was if you stayed and past certain time, so you're working towards the evening, I'm working through dinner, that you could go and have $25 to go down and get a meal, to go down and get your dinner. Well, they were finding, as there was this store, that you could buy things like laundry detergent and toothpaste and wine glasses. And even those that had a $400,000 a year salary, when they were due their $25 meal credit, they were going down to the store and just using their credit. They weren't using it for the intended purpose, which was to compensate you for a meal, to compensate you for the fact that you're not home having dinner. That was the purpose. And everybody knew that was the purpose. But culturally, it became acceptable to use it for whatever I want. It's just $25 free dollars. And they said no. That and even those at the top, they fired a lot of workers at a variety of positions because of the fact that they weren't following what they knew. They knew that they were working the system. They had found a loophole, and you're maximizing the loophole as opposed to doing a fair and just decision to say, you know what, I'm not going to go spend it on something that wasn't the intent. We are what we repeatedly do, as Aristotle says. If you're willing to cheat for $25, you're willing to cheat at something that's much greater. Every action that we do that is dishonest in nature inevitably influences your character. Small things lead to big things. And you hear that all the time when you have fraudsters that are caught. You see, well, I started off doing little things. It didn't really matter. But yet it often snowballs as we get emboldened to do things at a greater degree. and also just starts chipping away at our character. We are what we repeatedly do is a mantra that we should challenge ourselves with. Every action, every choice should be thoughtful. It should be done with the intellect of wisdom. It should be done in a way that I believe it's consistent with my character. It's consistent with goodness. It's consistent with somebody saying you have integrity in your choices. And that's what we want to reinforce. That's what we want to support at the end of the day. And so it is critical as we think about how our past behaviors are the best predictor of future choices we're going to make. Right? If you can see that you made unethical, inappropriate decisions in the past, it is more likely that you'll make those inappropriate choices in the future. We gave the example potentially as we think about Jeff Skilling with Enron, right? If he was in a culture that wasn't a sense of integrity for 20 years, and now I'm over here at this other company, what past behaviors, what character flaws am I potentially bringing to this new organization? We create habits, and sometimes well-ingrained habits are really hard to change. As we start having maybe an intention to change, but it comes really difficult to change because we always tend to fall back on what is most pleasant, what is most rewarding at the end of the day. And I do want to talk about how this does tie in to a framework that we should all be familiar with as CPAs. The fact that we have the COSO, Internal Control Integrated Framework, and the base of that entire system of controls, the foundation of it all, is that control environment. COSO would actually say the most important principle, the most important component is that control environment. That if you don't have a solid foundation, the rest of your system's going to fall apart. As you think about building a house, we're building a house up in the mountains of North Carolina, and we went and checked on the foundation last weekend, and it is a solid foundation. I am happy with this foundation. I feel as if we're setting ourselves up for success, right? Things should be stable and firm and supported. Well, that's what we want to feel like as far as our system of controls, that we're starting with a commitment on the part of management and governance to say through my actions, my behaviors, my attitudes, my directives, it is consistent with integrity and sound ethical values. We understand that we sometimes have to balance needs. We need to look at who's going to benefit, who's going to be harmed, and try to make the most fair and just decision, just like Aristotle says, the golden mean. Where is the golden mean where I'm doing the least amount of harm with the greatest amount of good, and it's still consistent with our sense of integrity? And we need to make sure that we have processes that establish to say, we have these standards of conduct, and are we ensuring that people are doing those things? And if there are inconsistencies with expectations around standards of conduct, is there ramifications? Such as with E&Y, when they ended up firing a bunch of people because they were still cheating on their CPE. They were taking multiple courses at the same time. And they're saying that's not consistent with the behaviors we want to see in this organization. So let's have some accountability. Let's have some ramifications as they're setting the tone for what's acceptable versus not in our organization. And governance has an important role in providing that oversight of making sure that they're comfortable with the design and the implementation and the maintenance and monitoring of internal controls, whether those controls are there to achieve operational performance, strategic objectives, compliance objectives, or reporting objectives, external financial statements for general purposes, but also budgets and forecasts and other things. Right? Their governance has ultimate accountability for overseeing the critical, important choices that management would like to make. They're there to be objective, to say prudently, ethically, we don't want to do this, right? Just because you can do something doesn't mean that you should. And somebody needs to be the mechanism to say, I don't think this is something we should do, even though we can do it. There needs to be appropriate lines of responsibility and authority in any organization, whether you are a CPA firm or you're working in business or industry. We need to have a way of ensuring that we have delegation of authority and that there are key roles that have accountability, and that we need to enforce this system of controls, including all of the components and principles that is really foundational, built on that control environment. And part of the control environment is also to make sure that we are attracting, developing, and retaining individuals that are competent to carry out their roles and responsibilities. As we do have succession planning, we have professional development plans as we move somebody up to a management role. Have we sufficiently developed them and their capabilities to do so? As we also have to think about contingency plans. What if somebody unexpectedly quits? Or what if something else happens, like somebody's in the hospital for 3 months? How do we deal with these unexpected sudden changes that also could occur as we think about our ability to continue as an organization? Are our internal controls going to be influenced by the fact that a key role, key responsibility is not accessible at this point? Who's going to fill in? How do we make sure that that control keeps happening when we have a contingency? Right? As we think about that being an important element, as we focus on cross-training and other factors that are important. As we look at the control environment, we need to have principles that support it. A commitment to integrity and ethics, having governance that's embracing their role, having appropriate lines of authority and structure within the organization, having a commitment to competency, and then having accountability from day-to-day decision-making, poll check, from day-to-day decision-making to just thinking about how are we creating incentives and pressures through our incentive compensation plans, through the feedback that we give. What are we rewarding and recognizing? What are we penalizing or saying is a bad thing to do? What types of disciplinary actions do we take? What types of rewards and recognition do we give? And is it consistent with the culture that we want to establish? A lot of times there is pressure from within the organization to meet unrealistic targets or to have too much responsibility, to have to function with not enough resources. When we focus on resources, there's resources like human capital, there's resources like technology, there's resources like intellectual resources, such as checklists and practice aids, having access to research tools. Are we providing the right resources is also another factor as we're focused on what we need to have to support our ability. We're not doing excess pressure where we're setting people up for failure. And as somebody's trying to achieve a goal or an expectation, individually or entity-wide, that creates a reason for there to be something like fraud. If you think about the fraud triangle, one of the things has to be that there's an incentive or pressure to perpetrate the fraud, but also I have the opportunity and also I can rationalize it as I think about my attitude, the rationalization. And so in the end, we do want to think about the culture. In 2024, this company, LRN Learn, right, that they were a benchmark as they looked at the ethical culture and looking at companies with the strongest ethical cultures, how they actually outperformed companies that had a weaker ethical culture by about 50%. They're saying as you have a sense of establishing that control environment and emphasizing it and dedicating resources to it and holding it to be something that we truly want to excel at. The more that you created that solid foundation, the better your company is just going to naturally perform. There is a psychologically safety net around making choices that an employee is more willing to report things, to talk about concerns with fraud or error or potential noncompliance. In an environment that reinforces that culture, you're more likely to have somebody that's willing to put themselves at risk to speak up. So it doesn't necessarily have to be fraud. I'm not like a whistleblower where I think somebody's fraudulently doing something with an intention to deceive, but even being willing to own mistakes, to highlight, well, I don't know if our systems are set up in a way that's properly going to help us manage this risk with noncompliance. I think we might have a material weakness here. The willingness to speak up comes from a psychological safety net that I'm in a culture of an organization that values that. And so you do find that a lot of organizations are investing more and more in the culture and the training that we might need to have. Questions that you might evaluate as you think about the governance and leadership of an organization are things like, how does leadership demonstrate its commitment to ethical behavior? Do you think they demonstrate it on a day-to-day basis? Do you think they demonstrate it with their long-term strategies? Do you feel as if there's clear policies and practices to address conflicts of interest, harassment, discrimination, and other ethical issues? And how do we make sure that the company ensures transparency in our decision-making processes? But also, is there transparency to those that would be affected or impacted by our decisions? Do we open up a dialogue with impacted parties, whether it's my customers, my vendors, my employees, my stakeholders, my investors, my potential investors? Is there a clear line of being able to get feedback and showing that we take these things into account as I do try to assess who's going to benefit from my decision, who's going to be harmed by it, and how do I strike that golden mean of doing the most amount of good with the least amount of harm? And so we do need to embrace that this is something that we want to have an open door policy. We want to have two-way conversations. We want to have people willing to speak up. And I feel safety in doing that. We want to make sure as well that there is accountability for things that are inconsistent with our culture, our ethics. And so we can look at things like, what type of training programs are we providing to educate employees about ethics and compliance? How do we learn about a company's code of ethics and the consequences of noncompliance? It's funny, as a CPE provider, I sometimes get asked to come in and do a training at a company where there's been a fraud. And so now all of a sudden they're like, okay, we need to have fraud training. We need to have ethical training. Well, it's like, well, maybe you should think about the training before it happens, as opposed to have it being a reflective response. Proactively, let's reinforce and talk about these concepts so that we can ensure that we're trying to prevent these things from happening in a proactive way. And so it does go to look at, as you look at the design of a system of controls, we want to ensure that this system is designed in a way where there is a mechanism, either in a formal mechanism, like some sort of website or email address or something where we can report things that we think are unethical, aren't prudent, aren't reasonable, in an anonymous way? Or how do we just ensure that there's other ways of reporting to concerns? Who to report to? Who do we turn to? What's going to happen when I do that? Like, we want to encourage feedback. Like, we want to ensure that people feel comfortable voicing opinions, voicing concerns, whether it's a formal mechanism or an informal mechanism. The number one way that you detect fraud is through tips. And half the tips come from employees, according to an ACFE survey on fraud. And it also, though, comes from tips from customers or vendors. It could come from your bank. Like there's other places where we might, want to encourage sharing of information. But certainly half of the tips come from employees or contractors, and we want to encourage them to speak up. How do we discourage unethical practices like putting profit over other things that we value, like quality? And how is it that we handle situations where it might conflict with either short-term business objectives that we've established, like getting a certain realization rate on a engagement with a client as a CPA firm, having targets with realization, or having targets as a organization, a for-profit, around certain profit margins? As we think about a nonprofit, having pressure to make sure that some percentage of expenditures are related to our programs versus our supporting activities. Like these are all things that we have pressures. We have objectives and targets and metrics that we might hold each other accountable to. But how do we handle cases where we're making a choice to achieve the objective over something that might be the more ethical decision in the end? So I talk about Kohlberg's theory of moral development a lot in my business trainings. Those of you that have been in my ethics courses in the past are familiar with this concept. So one of the things would be, if you are aware that prices being charged for a good or service in high demand after a hurricane are being inflated. So out here in North Carolina, we had Hurricane Helene. We're still recovering from Hurricane Helene. If somebody is adding the cost to something like the supplies we need to recover from the hurricane, we know they're being inflated. Should you stay silent? Should you report concerns to an appropriate level of management? Should you resign? So ethically, they're saying you don't just have to go straight to, well, I'm going to resign from this company, but you should report your concerns and say, hey, I don't know, this is consistent with our company values. I should be in an environment where there's an appropriate place for me to go and report those concerns without fear of there being some sort of ramifications on me, right? That I should feel comfortable with that. And so in these cases, this isn't a poll question, by the way, this is just a pulse check question. It's not one of your attendance questions. But it is something where you may end up deciding that, based on what I know about this organization culturally, the fact that they're willing to take advantage of this situation for profit, you may choose to resign. I might decide that I have to walk away. So Kohlberg's theory of moral development, Kohlberg was a Harvard University professor that was from like 1958 is when he created this moral development theory, and it still holds water today as we look at 2025. That sometimes we make choices just based on the fact that out of sheer force of obedience or punishment, I know I'm going to get punished if I do this. Somebody's told me to do this, so I just do it. We eventually start learning to make choices based on how it's going to impact me, right? Individualism. We then start making choices because we want positive reinforcement. Here's a polling question that you need to ask for your attendance check. Eventually, we start wanting to get good performance evaluations. We want to get the incentive compensation, like we're getting rewarded and recognized for things. And so therefore we do things to get that reward, get that recognition. We also make decisions based on what is permissible. What does the law or the regulation or the accounting principle stipulate? What does the audit standard say to do? And we function within these guidelines with standards and laws and regulations and other things that affect our decisions. Level 5 is I start thinking about the effect on others, right? As we have a social contract with others, including society, with ESG related matters, as we discussed earlier. And then level 6 is like this principled consciousness that I don't think I even understand myself, but is that further exploration. Let's give an example that you've discovered that your manager is falsifying financial reports in order to overstate the company's financial performance. Well, when we look at the situation, we could say that I decide that as we look at these levels of actions, I could say, do I report it? It could be yes, because I don't lie. But then I could decide, well, I might lose my job or there might be retaliation. So out of individualism, I might decide to not report something because I'm concerned about that risk. So while I know it's not right to lie, I'm more concerned about individualism as a second level. But then he might say, well, in my environment, I actually might get rewarded and recognized for my honesty because I have the good boy, good girl. And so that's key, right? From going to 2 to 3, it's because we create that cultural tone that makes people feel comfortable that I'm actually going to get rewarded and recognized if I speak up versus I'm going to lose my job or be penalized or retaliated against. Culturally, we have to set the base to encourage people to speak up. We also, in the end, could say, I don't want people to think that I'm complicit in this. And so therefore, I decide to speak up. It also may be based on level 4 that intentionally misreporting information is actually against our code of conduct as CPAs. And so there could be this level 4 mentality that comes into play. Just because something is legal doesn't mean it's ethical. Just because something isn't inconsistent with a policy, a regulation, a rule, doesn't mean it's the right choice. Laws, regulations, standards, rules, often they don't change as fast as they should. As we think about how those laws, the regulations, the standards, the rules reflect the current environment. And so often it's just like I said before, just because I can do something doesn't mean that I should do it. Right? As we think about Enron and how they created these separate legal entities in order to avoid having to consolidate these entities, because based on the rule, you didn't have to consolidate them if you didn't have the voting interest. Well, in principle, you still retain the risk and reward. You still, in essence, was the primary beneficiary of this separate legal entity. You found a loophole, but should we take advantage of the loophole? What is the ethical thing to do? As we might be consistent with GAAP, but inconsistent with ethical codes of conduct. Often accountants tend to fall back on this level 4 mentality. What does the rule say? What am I permitted to do? And then instead, what we should be focusing on as a general based concept, the foundation of every set of general purpose financial information that's out there is it useful? Is it useful to the users? Is it faithfully representing things? Is it timely? Is it supported? So the sense of the preparation and fair presentation of financial information required. I may be preparing financials in accordance with a given accounting framework like GAAP, but am I faithfully and fairly doing it? As I think about not being deceptive, I want things to be complete and understandable and transparent. Hence, disclosures, where we often are providing useful information about, hey, you should know that this is an estimate over here. Here's the methods and assumptions, but here's the risk of uncertainty. The actual outcomes might be different. We have things like type 2 subsequent event disclosures. The event isn't affecting the current period financials, but you should know it's of consequence. And in a future accounting period, you're going to see the impact of this event or this decision that's been made. It's an unrecognized event in the current period, but it might influence your decisions knowing that there's going to be effect on a future period. When you have public accountability, like a public entity that files with the SEC, or like a government that has to follow GASB, governmental accounting standards, GASB requires there to be a management discussion and analysis in the financial statements. It's GAAP to have an MD&A section. SEC filers have to provide these filings quarterly and annually that gives prospective insights and discussion on the part of management, because that's useful information. But even when I'm not in a regulatory point of view, just in regular GAAP, we have to give information about related parties, significant uncertainties, substantial data about going concern, subsequent events, just anything that, particularly in the near term, the next year, if something could significantly adverse affect this organization, their financial results, their financial position, we should highlight that risk. That's GAAP to do that. So are we being transparent about those things as we think about the disclosures that would be useful? If I was somebody making an economic decision based on these financials, what would I want to know? So there is this sense of valuing transparency and accountability as we think about those that might face harm. And if I know we're putting misleading information out there, even if we could justify it under GAAP, our basic financial statement concepts say, regardless of what GAAP says, we want to have the preparation and fair presentation of financial information. Falsifying financial information is inherently wrong. It violates our principles of what would be honest and just in the situation. And that's really what that level 6 principle consciousness says. We don't do it. Oftentimes, unethical behavior comes from individualism. What's in it for me? I don't want to get fired. I want to earn this bonus. I need the money. Like, there's incentives or pressures that are keeping us from doing the right thing because I'm more concerned about individualism. I'm at that lower level of Kohlberg's theory of moral development. I also can't always operate at level 6. To say that we always have to be at principled consciousness and thinking about society of overall else, I can't do that. Remember, we talked earlier about businesses do need to think about societal mores and what we need to do with environment, social governance things. But I also have to think about my employees and my suppliers and my customers. I need to think about my stakeholders, my investors, my creditors, my membership if I'm a nonprofit, my citizens if I'm a government. Why do I even exist as an organization? I have to provide value to them. I have an obligation to that. I do have a fiduciary responsibility to them, but I also have a responsibility ethically to all these other parties. And so when we make decisions, we want to say what is fair and equitable as I consider everybody that's going to be affected by my choices. So I do want to talk a little bit about what are we doing as far as sometimes we justify our behaviors. If our behavior is inconsistent, we rationalize our behavior. We make excuses. We justify things to the degree that eventually we've convinced ourselves that it's true. Our behavior that repeatedly happens does change sometimes what we value, because we often fall back on what is most pleasant, what is most rewarding, what is most self-satisfying versus what is truly right or good in our intellectual wisdom. We lie to ourselves as we self-justify, and then eventually we start believing the lies. Misrepresenting a product feature to close a sale because I have to meet a sales quota is unethical. Yes, you have this quota to meet. I have this metric that I'm accountable for. I need to meet this quota to get paid. But are you doing it in a way that is misleading or misrepresenting to the customer to just close the sale? When we think about the fact that I think I'm paying too much in taxes, and so there's a loophole, are we creating offshore accounts and shell companies to avoid taxes? So, yes, this may be a loophole that we can exploit, but is it ethical? Right? Is it consistent with our values? Sometimes we justify financial reporting fraud because of the fact that the company is going to go bankrupt. And so I don't want to harm my employees. I want to make sure that, I'm not harming my customers and my suppliers if we declare bankruptcy. We justify falsifying the financial records because we're worried about the impact on others, as we are now kind of saying, well, what is the right thing to do? Well, even if sometimes we do harm others, in the overall balance, right, it still wouldn't be the right thing to do. When we focus on things like plagiarism, well, nobody's going to notice. And that becomes difficult, and sometimes as things change. Like we can use artificial intelligence to say, hey, write me up a summary around a given issue. And they create that summarization. Is that plagiarism? Because I had Chat GPT or some other AI technology create the summary. Well, you'd still need to read it. Polling question. You still need to read it. You still need to put it in your voice. You still need to make sure that you're validating certain things that they call factual. I tell you all the time that I have AI write up an answer to a question, and I know it's wrong. I know it's like using outdated information, right? Or they're missing a nuance of the question. Like we would just still say, well, how do I use this technology in a way that isn't plagiarism, meaning that I'm just not taking something and cutting and pasting it over, right? There was the CPA firm that got in trouble because they were writing a government report and they used AI to generate the report and then build the government for this report. And they're saying, no, that was plagiarism. That was wrong for you to do that. And we need to focus on those counterbalances that do exist. We need to be careful about things like promoting a friend or somebody that we like more over maybe somebody that's a more qualified candidate. You may be feeling like I'm helping somebody out that I know, right? But my underlying motivation is self-serving, right? As we now are doing harm to somebody that might be better qualified. Are we using company supplies or other assets for personal purposes because we feel like they that I'm underpaid, right? That I'm not, right? So I earned this, I deserve it, right? That you're not treating me fairly. People want to feel like they are valued, right? That you are treating me fairly and justly and equitably, right? As we do think about things. Now, sometimes we have to consider intent. Sometimes I make a mistake. I misrepresented something. I booked an entry in error. I inadvertently put something in the wrong account. These are things where intent, sometimes the deliberateness is what might make it less ethical. So we do need to think about good intentions. And part of that is to be, I made a mistake. Let me go and back and foster trust by going back and owning my mistake. I delivered a report to the client. I realized that there was an error in a calculation. Well, let me go back to the client and be honest about that and say, I made a mistake. Building trust is critical, for they will forgive the mistake. What they won't forgive is I find out later that I used this report to make a decision and it had an error in it and you didn't speak up. Right? Intentions and creating trust by owning mistakes, being honest, trying to correct them, even if it means that there could be something, right? That there could be, okay, I'm going to have to be accountable for the fact that I made this mistake. It could affect you personally. But the most fair to do is to not function in this world of individualism, not just what is it that we're going to get rewarded and recognized for, but to really think about my obligations to others and how that really should give a priority. There may be gray areas, and sometimes psychologically, we partially become clean about something. I partially tell you about an issue, but I'm not telling you the full story. But I told you the part that matters, right? I told you the element, right, that I thought was most critical. We also sometimes we find that there's studies that for somebody that just did a good deed, they think they have a moral license to do something that is unethical because it's going to all work out. I just did this, so I have license to do that. I just did something good, so I can do something that's bad. I'm still even Steven at the end. Psychologically, that is a justification that we do catch ourselves in. We have to recognize and own and really thoughtfully go through the fact of recognizing what I'm doing is wrong and why is it wrong, right? It's the why is it that it matters. Like, who am I harming, right? What's the negative outcomes? What's the reason why I should take action? Not just out of the fear of getting caught, because sometimes that's what we function in. The fear of getting caught is a deterrent. But even if what I'm doing, I would never be caught. God, like it could be something, as they said, that nobody would know. A moral person will still make the right decision. You need to feel remorse for the act itself, for the thing that occurred. And then with sincerity, resolve to change it. And then put steps in place to have it not happen again. As I can show that I can change my actions, my behaviors to demonstrate I learned my lesson. It won't happen again. Here's what we're going to do to reinforce and ensure that does occur, and then not have it repeat itself. People can forgive individual instances. It's a pattern of behavior that now hurts your integrity. And so when you're in an ethical dilemma, analyze and say, who's going to be harmed? Who's going to benefit? But I also need to understand, particularly as a CPA, I have additional responsibilities and obligations that I have to follow through with. I have a code of professional conduct that says I'm expected, if I use this CPA designation, that I am going to function with integrity. Even if I'm not the one involved in a fraud or a misrepresentation, I'm not going to enable somebody else to do it. I have the capacity, ability to speak up, and I should speak up. It is your ownership, your responsibility to do that, to function with integrity, to function in the public's interest, to make sure that you're making decisions that are consistent with this. And that's why people hire somebody. If I have equally qualified candidates and one's a CPA and one's a not, if I value the CPA designation, I might choose to hire you because I feel more confident that you're going to be competent, do your work with due professional care, function with integrity and objectivity, make sure that you have quality control, do the right thing. Like, you're trained of this, you're expected of this. So they're going to expect that you're going to demonstrate those behaviors as you go forward. So make sure that you are making the best, most ethical choice, considering all the circumstances, considering all the consequences. You follow your moral compass. Why is it that ethical people never get lost? It's because they're following a moral compass. And so also, we want to reflect. Sometimes we made a decision and it unintentionally had some consequences that I didn't take into account. Well, you know what? That's a lesson learned. I'm going to take it into account next time, because we are a continuous learning society. right? We want to make sure that we are growing and learning from the impact of decisions and choices. And did it end up being the right thing or the wrong thing? Did I misinterpret? Did I misimply? Did I make a mistake? Well, let's own the mistake and do something different next time. As we continue to apply this value theory, choose the alternative that results in the greater good and the lesser evil. So yes, we want to think about things like, is this legal? Is this consistent with company policy? Is it consistent with regulatory requirements? Is it consistent with my professional obligations, with my standards that I have to follow, with the policies of the firm, of the company, conflict of interest, and other things? So am I consistent with laws, regulations, standards, policies, rules? But I also want to make sure that even if I can say it's in compliance, is it fair and balanced? How am I going to feel about this decision? How am I going to feel about myself, but not just selfishly making decisions about what's going to reward or benefit me, what's going to be most pleasant for me? What's the right thing when I start thinking about others? How would I want impacted parties to know about this decision? How's it going to affect others? Would I want my mother to know? Right, there's a good test right there. If your mother knew about this decision, would she be proud of you? Right? Would I want my friends and family to know that I made this choice if it were to come to light? That's a good ethical check as we're applying this theory of being able. Sometimes I have to make tough choices. Sometimes I have to lay off people. I have to restructure, right? I have to do something. We need to restate those financials because they're wrong. Sometimes I have to do these things, and somebody might be harmed by that decision. But as I look at the alternatives, this is the most fair and just thing that I can do as I'm looking at things from a big picture point of view. As I apply the Kohlberg theory and I start doing things not, based on thinking about level 5 and level 6 as being an influence on my choices. We're going to wrap up here coming up in just a few minutes, but I do want to briefly mention how the original accounting textbook written in 1494, that it did create a chapter that focused on ethical behavior and the importance of being transparent in conveying information. Because there said lack of ethics will naturally lead to data manipulation, fraudulent financial reporting, financial malfeasance. So even back when they created the language of accounting, it was still a focus on ethics. And that is why the AICPA does have this code of professional conduct where they're promoting principles and responsibility for these principles, honoring the public trust, don't do things for personal gain, but also understanding that there's some guidelines and principles that are important if I'm a member in public practice. But just because I'm a CPA that works for a company, if I'm in industry or business, if I work for a nonprofit or a government, I still need to function ethically. I need to adapt these principles to my environment. Even if I'm retired or between jobs, I still need to function ethically, consistent with these principles that exist. I'm not going to discriminate. I'm not going to harass. I'm not going to cheat on my CPE. I'm not going to do an act that might be discreditable to the profession. An act discreditable is a broad-based concept. Would this discredit the profession and have people think lesser of the CPA designation if I made this choice? That should be an impact in what we're thinking about as we're making our decisions. And so it is important that the code does primarily rely on CPAs, on individuals, to voluntarily comply. Now, there is also things like peer review. There's SEC oversight, right? There's PCOB oversight. Poll question. Make sure you answer that one. It is something where we do have some sense of the fear of getting caught through all these mechanisms that are in place. But ultimately, if we make a choice and we believe that there was, like, we had to go through this act of deciding right from wrong, we want to be able to justify our decisions. We want to be able to say, if I get hauled in front of my state board of accountancy, I can say I did the right thing. And sometimes it's documenting those concerns that become key. We have to make sure that also you can be held responsible for the actions of others. If I have the ability to have authority over that individual or control things in some way, I have a responsibility of speaking up. And so we do want to make sure that we're taking steps to look at alternative actions, think about everything that's involved, and just be prepared to justify why I thought this was the best choice. Right? This is a pulse check. It's not a polling question, but thinking about, are you obligated to report the discovery of unethical behavior? One of my colleagues isn't doing something that I believe to be consistent with our values and our rules, our principles, our code of conduct. If they happen to be a CPA, I got to hold them to a higher standard. So yes, I'm responsible for speaking up. And within things that we are dealing with from like the SEC point of view, they do have their own mechanisms for detecting financial reporting irregularities to try to investigate potential violations. There also is an office of the whistleblower that is trying to get tips, trying to listen and look and investigate things. And there is a lot of cases where you find SEC fines and penalties. It's because somebody was a whistleblower. Somebody spoke up and said, I don't think this is what should be happening, whether it's with the company or whether it's with their auditors. And Sarbanes-Oxley back in 2002 was really focused on, when we had all these big fraud and accounting scandals that occurred, they said, look, if you are an entity that is public, like you're a public business entity, that you should have a code of conduct, right? You should have training related to what is it that we should do from an ethical point of view, right? So there is sometimes regulations that push us in a particular direction. But the hope would be, particularly for CPAs, as we mentioned, we have a code of conduct. We shouldn't make we should not make choices and decisions that are inconsistent with our code. We need to make sure that we're voluntarily complying, because when you sit and get that license, that's the value that you bring that differentiates you from others. Otherwise, why go through the process? Right? Why go through the process? Somebody could have a master's in accounting and have equal training in technical rules and application of accounting principles. But having the CPA is like the cherry on top. It's like understanding that you do have this sense of compliance and accountability that you're going to hold yourself and others accountable for. Right? That sense of expectation is going to be more important for you. So hopefully everybody enjoyed today's program. Just to let you know, there's 2 different evaluations for this. There is the valuation that'll come for the course, but then also the Virginia Board of Accountancy has a separate website, a link here, that if you wanted to go to their website, they will ask for feedback specific to how it is that they handle this ethics requirement. So if you have feedback about the process, or if you wanted to tell them something about this course, you could do that as well. But it's really, they want feedback that would be useful for them. And then we also need to get the evaluation to make sure that we're in compliance with the NASBA requirements. I'm going to turn things back over to Grant. He's going to wrap us up, I think.
I am. Thank you,
All right,
Jennifer. And I'm
awesome.
looking through these comments, and This is the best presentation on ethics I've heard in a long time. Thank you for the excellent program, great speaker, great information, great presentation. Just wonderful, Jennifer. We appreciate it, and it's so valuable, and you do it in such an entertaining and engaging way. It's just great. We really appreciate your time today very much.
Thank you for having me back this year.
Absolutely. I'd also like to thank our exceptional marketing support team at Cherry Beckert, including Leah Gearhart, Eunice Arias, and Aaron Riley, for preparing and running today's event. Our next event will be Fiduciary Risk, Responsibility, and Opportunity, Implications for Health and Retirement, with Allie Gregory and a panel from the Marsh McLennan team. So please make sure you log in early next week. And finally, I'd like to thank all of our sponsors for their support of our 2025 Financial Executive Forum. And with that, I thank everybody and look forward to seeing you again next Thursday morning.